MCQ series for BFM. Presently we are in Module A, International Banking. In this series we are covering all the topics which are required for clearing CAIIB in the May 23, means new series. Okay. So follow this series completely. Firstly, download Adda 24/7 app in your mobile. In this app you'll get all the premium study material, current affairs, job alerts, daily quizzes, plus live video lectures, notes and tests. You can get everything whatever is required for CAIIB. Okay, so download it now. Also subscribe to Officers Adda 24/7 YouTube channel. In this channel you will be getting all the updates on JAIIB, CAIIB and various banking exams. Also you will be getting various free series of JAIIB, CAIIB and all the topics of that. Okay, so whatever is free you must first grab it, isn't it? These are the two new batches for English and bilingual for CAIIB. More on this later. I'll cover the main part. We'll be covering all the 4 important topics in both the batches. Also, importantly, we'll be covering all the numericals, objective questions, theory questions, whatever is required. Okay. Today's topic is pre and post shipment. Now, firstly, understand what is shipment, pre-shipment, post-shipment. What is this for actually? This is basically for export financing. Export financing means what? Suppose if I am an Indian, I am, let's say, Reliance, and I do exports on the regular basis. So once I do the exports, if I am doing the exports, so I'll be needing the finance from the banks. Okay, this finance is needed in both the stages. One is before the shipment and second is after the shipment. Means what? I'll give you a simple example. Suppose if there is a buyer in, let's say, USA. Okay, buyer in USA, and I am the seller over here, seller. Okay. Now what happens in this case in India? Here in India. Now what happens? This buyer gives the order, purchase order. Okay, PO we call it, PO. Now once I get this PO, if I am a bigger company, then I don't need pre-shipment finance. Okay. But if I am a smaller company, I'll be definitely needing pre-shipment finance. Why? Because if this person gives me an order for some big amount, let's say $1 lakh. For me, for a smaller company, it's always big amount, $1 lakh. Okay. If I receive this much amount, then I'll be needing raw material to manufacture this order. Now this raw material, I'll have to buy it from somebody, from some supplier, raw, right? I'll be needing labor to manufacture that, right? Because this money which this buyer will give me, when will the buyer give me? The buyer will give me once I sell the order to that person. So before selling I have to manufacture. For manufacturing I need raw material and labor. For that the shipment which is given is known as pre-shipment. Okay. The finance is known as pre-shipment over here. Then what do? I manufacture the goods, take the raw material, take the labor, I do the manufacturing. Okay. Once I do the manufacturing, after that what do? I send the goods to this buyer via sea. Generally it's sent via sea only. Okay. Sea. Okay. So once I load it on the ship, see this is the port of India. Okay, any port it might be. Once I load the goods on this ship, okay, once I load the goods, manufacture and load it on the ship, after that what shipment, whatever finance I get, that is known as post shipment. Post. Okay. So before loading, whatever I get is pre-shipment. Means this includes raw material, labor, any waiting period also. Everything over here is called as pre-shipment, and after loading I get post-shipment. So these are the two types of finances which we always give to all the customers in India. Now understand, in India the customer should be Indian citizen, okay, or the Indian company. Okay, moving on. Now have you understood firstly pre and post shipment? Type yes in the comment section if you have understood it. You need to understand the concept clearly. Okay. Yes, I am seeing. Yeah. Now as you have understood, I'll ask you one question. Okay, let me see how many of you have understood it really. My question is, if I give pre-shipment finance to some X, let's say this manufacturer seller's name is X over here, X. If I give a pre-shipment finance to this Mr. X, can I also give the post-shipment finance to Mr. X? Or, understood the question? See this. If I give pre-shipment finance to Mr. X, can I also give post-shipment finance to Mr. X? Or is it that as I have given pre-shipment finance, then why does the seller need a finance again after this shipment? So I need not give him post-shipment finance, isn't it? What do you think? If pre-shipment is given to somebody, can a post-shipment be again given to the same person? Yes or no? Type yes or no in the comment section. Fast, fast, fast. Many of you are typing no. So here the logic is, it can be given and literally it should be given. Okay, because even after manufacturing there are a lot of expenses which come to that seller. Okay, so both pre and post shipment need to be given to this buyer, to this seller. But only point which is to be considered is very important point. Now look at what am I telling you. Whenever you give post shipment finance, you first close your pre-shipment finance, close, okay, and then whatever amount remains, then you credit it to the customer's account. Got this point? So whenever I give post-shipment finance, I'll first credit it to my pre-shipment finance, whatever is given to that person. Means, see here, if pre-shipment is given as rupees 80 and post-shipment is given as rupees 100, then I'll first close my 80 rupees and then give the 20 rupees which is remaining to the customer's account. Okay, account of that customer. Okay, got this point? Now you'll ask one question to me. If pre-shipment is 100 and post is 80, then what? This can't happen. I'll tell you why. Because pre-shipment is for manufacturing of goods. It is always given on FOB basis, free on board. So if it is given on FOB and for manufacturing, it will always be lesser than the post-shipment finance. Okay. Now let's read the topic. Pre-shipment finance refers to the credit extended to the exporters prior to the shipment of the goods for execution of the export order. Same thing, right? Before the loading of the goods. Post-shipment finance, it refers to the credit extended to the exporters after the shipment of goods for meeting the working capital finance, right? Meeting the working capital means whatever is the gap in my working capital, that is to be filled in. So that's why post shipment finance is given. See, these are the types of pre and post shipment finances. See this. Pre shipment finance is generally of three types: packing credit, shipping loan, advance against incentives, and import LCs. So all the three can be given to this person. Okay. Packing credit, this is generally given to exporter. See this, I'll write it over here. Exporter. This can be given to exporter as well as importer, both. And this is given to importer. Always remember, this type of finance is given to importer. Okay? And this is given to exporter. Understand this concept very clearly. Import LCs are always issued on the basis of importer. Packing credit is always given to the exporter. Advance against incentives can be given to exporter or importer, whoever is getting the incentives. Got it? Now this packing credit can be again secured and unsecured type. Secured means we take the collateral, unsecured no collateral. Okay? Now post shipment finance. Post shipment finance can be of two types again. Export bill finance and advance against incentives. Now this is strictly given to exporter. This is never given to importer. Okay, and this is again given to exporter only, post shipment finance. Because shipment, who is doing the shipment? Importer will never do the shipment, right? Yeah. So this is strictly given to exporter. This is also strictly given to exporter. Now export bill finance can be of 3 to 4 types. One is LC bills negotiation, second is bill purchasing, third is advance against undrawn balance, and fourth is advance against collection bills. So these are typically used topics. You only remember the name now. We'll take separate topics on each one later. Only remember important part. LC is an important part in any export business. Collection is an important part in any export business, and remaining things like the advances against undrawn balance or bills discounted. These all bill discounted comes under collections generally. Bill negotiation comes under LC, and importantly also we get advance against undrawn balances which is not drawn by that customer. Means again I'll tell you, suppose if the bill is of 100 rupees dollars and the customer has received advance of let's say $40 only, so that $60 is known as undrawn balance. Okay. Amount of finance. Generally the amount of packing credit does not exceed 75% of FOB value of the goods to be exported, or the domestic value, whichever is less. Okay. So amount of finance in pre-shipment finance, remember this is for pre, it is 75% of the FOB value. Now the banks can extend it to 75 to 80 also, 85 also. Some banks give to 85% also. Okay. RBI says that the amount can't be greater than FOB value. Means if some bank wants, it can give complete 100% FOB value also, pre-shipment finance, but not beyond FOB value. Okay. Generally banks give 75% to 85%, but RBI does not restrict any bank from giving 100% FOB value. Okay. Post shipment. Post shipment finance can be given to the extent of 100% of the invoice value. Now this 100% of the invoice value is not based on any FOB value. It can be CIF value or CFR or this any value. Means these are all Incoterms, CIF, CFR. Okay. There is a separate lecture of mine on Incoterms, so you can follow the Incoterms lecture separately. Okay. So post shipment finance is always given 100%. Only two things which you need to remember over here are: post shipment finance is given to the extent of 100%, and pre is generally given to the extent of 75% of the FOB value. In exam also, if you get the question, take 75 because all your books contain 75%. Got it? Documentary evidence means how do I know whether this pre-shipment is to be given or not to be given? So it is pre-shipment. It is extended against the documentary evidence of the confirmed export order or the LC. Means I must get a confirmed export order or the letter of credit in my name if I am the exporter. See this. This is always given to the exporter. Pre-shipment and post-shipment which is considered over here are always given to the exporter. Okay. So I must get an order from the buyer in the USA, or why USA, any other country. Okay. I must get the order from that buyer. Okay. In that case, I'll be the bank can give me this pre-shipment finance. So I must have the confirmed order or LC. In post-shipment finance, it is extended against the evidence of shipping document certified by the customs authority. Now what do I mean by this? See this. Whenever the post-shipment is given when is the post-shipment given? When the goods are already loaded on the sea, right? When they are loaded on the ship and the ship moves out, right? From it, and this is my port, so it moves from this port. So when the goods are loaded on the ship, there is a customs office over here, right? This customs office definitely checks whether the goods are as per the order, whether the goods are as per the quality. All these things are checked. So this customs office over here, it certifies that we have checked these documents, these goods, and they are found correct as per the documentation. So this is known as documentation certified by the customs authority. Got it? So post shipment finance is always given on against the evidence of shipping documents certified by customs authorities. Clear? Okay. Move on. So before moving ahead, see this. We have a felicitation program ceremony arranged on 8th of January, 12 p.m. at Gurgaon. Okay. Check the address. Adda 24/7, and this is for JAIIB and CAIIB who have cleared this exam in November and December 2022. So those who have cleared, many of you are in CAIIB, so you all guys are in CAIIB, so many of you might have cleared in November, December itself. So go to that felicitation program. Adda 24/7 will reimburse your 3-tier tickets on both sides. Okay, so go for it immediately. Okay, there is a form for this. Click on the link in the description given, and you can go for it immediately. Okay. Also on the Adda 24/7 website in the app, you will get the details of this. Now it's a question time. Let me ask you the questions. In case of deferred payment exports, period of realization can be extended beyond 180 days subject to dash approval, RBI approval, board approval, manager approval, or none of the above. Means what? If I have done the exports, okay, now this is deferred payments. Here there are 3 types of payments in this export finance basically. Okay, one is site, second is usance, and third is deferred. Okay, now deferred means on happening of an event. Always remember, in deferred there is no draft. Okay, in usance there is always a draft. Okay, site there can be a draft or cannot be, okay, both the things are available in site. So when you are calling for deferred payment, both these things here, usance and deferred, both are future date payments. Future date. Only the difference is in usance we have a draft, in deferred we don't have a draft. So in case of deferred payment exports, period of realization can be extended beyond 180 days, because RBI says within 180 days I have to realize all the payments, but it can be extended beyond 180 days subject to dash approval. Whose approval? RBI, board, manager of the branch, or none of the above. Fast. A, B, C, or D. Yeah, or you can just type the name also. It is correct. RBI. Correct. RBI approval. Based on RBI's approvals here, if I have to extend the payment period, if I have sent the exports, but that buyer is not paying me within 6 months or the due date, here it's whichever is earlier, 6 months or the due date, whichever is earlier. If the buyer is not paying me within this 6 months, okay, within this 180 days, then I have to go to RBI then and tell them, see, this I have sent the exports, but this buyer has not paid me up till now. Kindly give an extension using ETX form. This form is called as ETX. Okay, ETX form. Got it? In case of deemed exports, realization period from the date of supply till the date of receipt of payment should not exceed dash 30 days, 90 days, 120 days, 360 days. Now what is deemed export? What is deemed export? What is export? Okay, I'll tell you. Let's cover this point. See, this is my country, India, let's say. Okay, and export means what? I'm manufacturing over here and sending it to, let's say, USA over here. Okay, USA. So I'm manufacturing and sending to USA. This is my normal export. What is my deemed export? Deemed export comes when I have a SEZ over here in India itself. This is my India. Okay, in India itself I am having SEZ, special economic zone. Means in these SEZs, all the manufacturing which is done is considered as though it is done not in India, but it's done somewhere else. Okay, it's not considered for business purpose. For business purpose, it is considered outside the part of India. It's not considered within India. Whatever is manufactured over here is considered, although means there are various names to this. Okay, export processing zones, SEZ, or various diamond zones are there. So these are considered as almost foreign country in terms of exporting. Whatever is made over here is strictly exported. It is never sold within India. It is strictly exported. Although some permission is given by RBI, but majorly it is strictly exported. Now, if I am a local manufacturer over here in India and I sell it to this person in SEZ, then that is called as deemed export. Okay, deemed. That is called as deemed. If I sell it outside India, it's called as simple export. If I sell it to some SEZ or export processing zone, then it is called as deemed export. I should be a local manufacturer over here. So now the question is, in case of deemed export, realization period from the date of supply till the date of receipt should not exceed 30, 90, 120. Okay, I'll give you the hint. 120 and 360 are out. Only 30 and 90. Now think. 30, 90, 30, 90, yes. It is 30 days, correct. 30 days. For deemed exports, it should be 30 days. And last question. In case of cash exports means normal export. Means India, USA. Sent over here. This is cash export, okay. Maximum period allowed for realization of export proceeds is due date or 6 months. See this, due date or 6 months from the date of shipment, whichever is. This was just now I told you one question back. Whichever is earlier or later. See, this is out as per bank's regulation and none of the above. Okay, these two I'll simply give you the hint. Earlier or later. So the export proceeds should be received here. If I sell it to this person in USA, so I must get the money within 6 months or 180 days, you can call it, or due date of that bill. Means due date means it's written on that order itself. When this person gives me the order, he writes to me that I'll be paying you within 2 months. So either 2 months or 6 months, whichever is correct. Earlier as per the order, or 6 months, whichever is earlier. This is the answer, correct? Okay. So these are the 2 new batches for CAIIB English and bilingual. You can join anyone. Okay. In both these batches will be covering ABM, BFM, ABFM and BRBL. All the 4 topics are covered. All the numericals, objectives, case studies will be covered. And there are huge discounts going on right now. I'll show you how to get the discounts. Very huge discounts. Okay. Let's go to Adda 24/7 live over here. Okay. Let me go to Adda 24/7. Hold on. Yeah. Say this. Now we are live on the site. If you are having the app, it's the best, I would suggest. Okay. In the app, you will be getting 1% extra also. You are using the coins. So JAIIB and CAIIB, click on this. Once you click on JAIIB and CAIIB, you will be getting the JAIIB CAIIB Mahapack, CAIIB 23. I would suggest you go for CAIIB Mahapack. In this Mahapack, what happens? You will be getting various batches. Say this. I'll click on CAIIB ka Mahapack. Okay. In simple, if you take single batch, you will be getting that batch only. But if you take Mahapack, you will be getting roughly 3 to 4 batches. Okay. In fact, 15 plus batches for ABM, BFM, BRBL. 15 plus batches means various teachers are taking these batches and you will be getting all the batches. Okay. 15 plus mock tests, CAIIB lecture wise PDFs, 50 plus topic wise question banks. Okay. Ebooks are available. So you can go for it. You can read this. Okay. Number 2, about the money. Okay. Now about the fee, let's see this. The fees is 35,996. Don't pay this much huge amount. Click on view offers. Always offers are going on somewhere or the other. You can go for the offer, and presently the offers are the huge, I would say. Y432. Put the code. Never forget this code Y432. Never ever. Click on apply. Once you click on apply, see this fees of 35,996 reduces to 7,199. And this validity is for 12 months now. 6 plus 6. So if you are getting 12 months validity and 7,199, just divide it by 12 months. Okay. 12 6 84. 12 6 72, right? So roughly 600 rupees roughly per month, isn't it? So 600 we spend it on tea only on a monthly basis. So this is an investment for lifetime. Okay, go for it immediately. Now I'll show you the portion, because what happens, many of us don't know the portion. Okay, this new portion, because it has already changed, everything has changed now this time, isn't it? So say this, you are having 4 compulsory papers: ABM, BFM, ABFM and BRBL. Advanced Bank, Business and Financial Management, and Banking Regulations and Business Laws. These are the 2 new topics added. Then you have electives: Rural, HR, IT, Central and Risk. No retail banking. There is a negative marking. there is also subjective questions. There are subjective questions which have to be written by hand. Okay. So these are something new concepts which have been added to May 23. That's why you will be definitely needing the guide. So join the batches ASAP. Okay. So I'll stop over here. Tomorrow I'll be back with another series. Till then, bye.